This month, a few changes are implemented to the tactical asset allocation. All are driven by our view that US 10-year treasury rates will be on the rise for the rest of the year. The most recent moves above 2.7% simply emboldens us on that score, and we now view a gradual rise over the next 12 months to 3.25% as the likely outcome. We think the Fed will deliver on its guidance to hike at least 3 times this year. The obvious allocation effect of this view is that duration risk is one that we look to reduce in portfolios. Hence, we have decided to reduce investment-grade bonds from neutral to underweight. The effect of this move is to increase cash in portfolios, something that we have been advocating to avoid doing for now, given a benign global growth outlook across all economies that we follow. Therefore, we choose instead to redeploy the proceeds into European and Asian equity. The European equity weight moves from neutral to overweight. Growth numbers globally have been encouraging and nowhere more so than in the European continent. The last 2 quarters of 2017 were ahead of consensus and growth momentum looks very well entrenched. From the point of view of valuation, Europe trumps the US, having lagged in performance terms through most of 2017. A strengthening currency is one potential headwind, but our view is that the market is largely priced in this risk already. In Asia ex-Japan, our allocation detracted somewhat from performance last year, and we now decide to close this position. In some countries, valuations are still challenging, but a move to neutral signals our view that on a longer-term basis, Asia offers opportunities on a selective basis. It is therefore in line with our advice to continue to look for rotation strategies when and as they arise. On an overall basis, portfolio risk will move marginally higher, but cash weights overall will remain the same, given that the strategic weight of investment-grade bonds in the allocation is much higher than Asian stocks. These changes simply reallocates the cash, and I reiterate, no new money is moved into risk assets on an overall basis.